Welcome to this deep dive. We've got some fascinating documents here, all about Rajoo Engineers Ltd.
Yeah, and it's really interesting timing, too. We've
Yeah.
got the raw numbers, we've got news about someone leaving the company, and then even a correction to the initial reports.
Yeah.
Yeah, I think there's going to be a lot to unpack here.
Okay, so let's give our listeners a little bit of background first.
Yeah.
Rajoo Engineers Ltd. specializes in plastic extrusion machinery. They're publicly traded on the Bombay Stock Exchange.
Right.
And these documents are all about how they performed in Q3 of fiscal year 2025.
Oh.
So for the quarter ending December 31st, 2024.
Got it.
Okay, so
Great picture.
big picture first, right? So the thing that really jumps out is this. Rajoo's revenue is down year over year, but actually it's up compared to last quarter. So profitability is a little bit of a mixed bag as well.
Yeah, so, I mean, if you look at the year-over-year decline in revenue, it's actually kind of reflecting a broader trend that we're seeing in the Indian plastic machinery market.
Oh.
So, there's been increased competition from Chinese imports. There's been some sluggishness in the domestic packaging sector.
Right.
And all of this has put pressure on companies like Rajoo.
Okay, so even though revenue is down compared to last year, that quarter-over-quarter improvement could actually be a good sign, right?
Yeah, it could be a sign that they're adapting
Yeah.
to those challenges that are kind of in the market right now.
Okay.
So yeah, definitely a positive sign.
No, what else caught your eye when you were going through these documents?
Well, one thing that I saw that really stood out was the inventory.
Yes, that's what I was going to ask.
Really shifted a lot between Q2 and Q3. Did you notice that?
I did.
Damn
In
it.
fact, that was one of my first questions. Like, what's going on here? Is there something else that we're not seeing?
It makes you wonder, right?
Yeah.
So if we look closely at what management has to say about it, in their Q3 statement, they're saying that this was all part of the plan. It was strategic procurement initiatives to take advantage of good raw material prices. But I would be really curious to compare their inventory turnover ratio to other competitors in this space. Because if there's a big difference, it could tell us that they're overstocked.
Right.
Or that they're facing supply chain issues that they're not being super clear about.
Okay, that's a really good point.
Yeah.
Now, speaking of needing a little bit more clarification, let's talk about that core addendum.
A correction to the financial statements.
Yeah. They had to reissue those consolidated results, and from what I understand, it's because they forgot to include profits from their joint venture. It's like, how does that even happen? What does that usually signal when you see something like that?
Yeah, I mean, for a company of Rajoo's size to have to reissue its consolidated results, it definitely raises some questions about how good their internal controls are,
Okay.
about how accurate their financial reporting is. Now, it's good they issued a correction, but investors are going to be looking at this really closely because transparency and reliability are super important when we're talking about financial reporting.
Yeah, that makes total sense. Now, it also makes you wonder if there are some internal shakeups happening because their company secretary and compliance officer, Mr. Rohit Sojitra, resigned just a few weeks later, effective January 30th, 2025. So the timing there is kind of curious, wouldn't you say?
Yeah, I mean, the fact that his resignation is so close to those results coming out and then this correction
Right.
definitely adds another layer of intrigue here.
Yeah.
Now, they're saying it's for personal reasons,
Sure.
but investors are probably going to wonder if there's more to the story.
Right. It's like we've got a little mystery on our hands.
Yeah.
Dip in revenue, a sudden inventory swing, a financial reporting error,
Yeah.
and then boom, a key player exits the stage.
Exactly. And, when a company secretary resigns, especially one who is also the compliance officer, that's not something to just brush off.
Right.
That role is crucial for making sure a company is following all the rules and being transparent with its shareholders.
Do you think maybe we should be taking a closer look at Rajoo's corporate governance practices, given everything that we've seen?
Absolutely. Investors need to pay attention to what happens next with Mr. Sojitra's departure
Okay.
and what steps the board's taking to address these concerns about internal controls and their financial reporting.
So we've got a dip in revenue, we've got that sudden inventory swing, we've got the financial reporting error, somebody's leaving the company.
It's a lot going on.
It's a lot going on. It sounds like the plot of a movie,
It does, yeah.
a corporate thriller.
Yeah.
But despite all that, Rajoo is still trying to grow,
Yeah.
right?
Oh, yeah.
They're issuing bonus shares,
Right.
and then they're talking about all these new orders that they're getting in South America and Southeast Asia.
Right.
So they're not just sitting back
No, not at all.
doing nothing.
They're going after those opportunities.
Yeah.
Yeah, expanding into new markets can be a great way to grow, especially for a company like Rajoo that's in a global industry.
You know, it's amazing to me how these, what some people might think are boring financial documents,
Yeah.
can actually tell us so much about what's happening behind the scenes.
Right, it's like a detective story.
Yeah.
It is.
Okay, so let's dig into the actual numbers a little bit.
Okay.
So for the quarter ending December 31st, 2024, Roju's standalone revenue from operations was 5,607.58 lakhs.
Okay.
Now, this is actually down from the same quarter in the previous year,
Right.
which was 6,008.45 lakhs. Now, I just said standalone revenue.
Right.
What does that actually mean?
So standalone in this case refers to the revenue that comes from Rajoo's main business operations, and it doesn't include revenue from any joint ventures or subsidiaries.
Got it.
So it lets us look at how the core business is doing separately from those other ventures they might have.
Okay, so their standalone revenue is down, but we know that their revenue overall was up compared to last quarter.
Yeah.
So potentially they're turning things around, but it's probably too early to say for sure.
Yeah. We'll have to keep an eye on that.
Now, what about profits?
So for this quarter, their net profit was 889.13 lakhs, and that's compared to 723.65 lakhs in the quarter before,
Okay.
and then 570.72 lakhs in the same quarter the year before.
Yeah.
So it's trending upwards.
Okay, so profits are looking good,
Well,
even though that standalone revenue is maybe a little bit shaky right now.
right.
What about the joint venture that they initially forgot to include?
Oh, yeah. Raju Bosano Extrusion Private Limited. So their share of the profit from that joint venture for this quarter was 50.92 lakhs.
Okay, so it wasn't an insignificant amount of money that they initially left out.
Right.
It makes it even more strange that they forgot to include it in the first place.
It really does, yeah.
Yeah.
And I think it highlights how important it is to do your research, to really dig deep. You know, you can't just rely on those initial reports.
Right.
You have to look for inconsistencies.
Yeah.
And anything that looks a little bit fishy.
So we've got this interesting situation with the joint venture. We've got the resignation of the company secretary.
Yeah.
We've got that big swing in inventory. And this is all happening while standalone revenue is declining, but profits are increasing.
It is a mixed bag.
It's a mixed bag. What do you make of all this?
Well, it's definitely complex, and there are some positive things, but also some things that could be warning signs.
Right.
I think the main takeaway for me is that it's so important to do your homework.
Yeah.
You know, you can't just jump to conclusions. You have to really look at the details.
We can't just focus on the good or the bad.
Exactly.
We have to look at everything together.
Exactly. We need to see how all the pieces of the puzzle fit.
Okay, so I think we need to dig into this a little bit more. And specifically, I want to talk about those bonus share issuances you mentioned. I want to talk more about Raju's international expansion.
Yeah.
And then, of course, we got to see if we can find out anything more about those inventory swings and why Mr. Sojitra left.
Absolutely. There's a lot more to uncover here.
Okay, listeners, stay tuned because this is a really fascinating corporate story. And we're just getting started. Okay, so picking up where we left off, let's talk about those bonus share issuances.
Okay, so Rajoo Engineers announced a bonus share issue in a 1.3 ratio.
Okay, so for every 3 shares that somebody owns,
Exactly.
they get 1 more.
They get 1 more, yep.
Okay.
So essentially, this is like a reward for existing shareholders.
Right.
It's a way of,
Like a little bonus?
yeah, a little bonus, yeah.
Yeah.
But it also helps to increase the liquidity of the stock,
Okay.
so it makes it more attractive to more investors.
Okay, so even though the share price adjusts downward, this isn't quite the same as a stock split.
Exactly, that's a good point.
Yeah.
A stock split, you're dividing those existing shares. But with a bonus issue, you're actually creating new shares.
Okay.
And that increases the company's share capital.
Got it.
So it can be a way of showing confidence in the company's future.
Right.
And it can attract more buyers and boost trading volume.
Okay, so it seems like a pretty strategic move. Now, you mentioned earlier that Raju is expanding internationally. So what did these documents say about how they're doing overseas?
Yeah, they're highlighting some new orders in South America and Southeast Asia.
Okay.
Doesn't give us a ton of details,
Right.
but it looks like they're targeting emerging markets
Okay.
where those plastics industries are growing.
Makes sense, because as those developed economies mature, their growth tends to slow down, right?
Exactly.
So it's smart for them to try to get into these new markets.
Exactly, yeah. It diversifies their revenue streams
Right.
and helps them capture those new opportunities before anybody else.
But getting into new markets is never easy, right? What are some of the challenges that they might face?
Yeah, I mean, for one, they've got to navigate different regulations, different cultures.
Right.
They need to build relationships with local partners, figure out distribution networks, and that can be really complicated.
And then there's the competition?
Yeah, of course, they're going to be up against established players,
Right.
both domestic and international.
It's not just about finding the market, it's about being able to compete.
Exactly, exactly. They have to offer something unique
Yeah.
that customers are going to want.
Okay, so let's circle back for a minute to Mr. Sojitra.
The company secretary.
Yeah, the company secretary. It's really hard not to connect the dots here, right?
Yeah.
I mean, did he leave because of that core agendum?
I mean, it's possible.
Especially because he was also the compliance officer.
Yeah, and compliance is really important for public companies.
Right.
Any sign of trouble with finances can make investors lose trust.
Especially when they have to go back and fix their financial statements.
Exactly.
Yeah, it's not a good look.
No, it's not.
Now, they said it was for personal reasons.
Right.
But I don't know, it just seems like there might be something more to the story.
It does, it does.
It's that missing piece of the puzzle.
Yeah, we might never know for sure why he left,
Yeah.
but it's definitely something to think about when we're looking at the bigger picture.
Yeah, I mean, when it comes to investing, transparency is key.
Absolutely.
And if somebody important leaves the company and we don't really know why, well, that's something we should pay attention to.
Absolutely. It raises questions about the company culture
Right.
and how involved the board is.
Okay, let's go back to that inventory thing for a minute.
Those swings.
Yeah. So you talked about several possible explanations.
Right.
But what are some things that our listeners can do to try to investigate this further?
Well, one thing they can do is look up Rajoo's inventory turnover ratio.
Okay.
And then compare that to the industry average.
Okay.
So this ratio is a way to measure how efficiently a company is managing its inventory.
Right.
And if there's a big change, it could tell us a few things.
Okay.
It could mean they have too much inventory.
Okay.
It could mean there are supply chain issues,
Right.
or it could even mean that they're trying to kind of make their financial numbers look a little different.
So if their inventory turnover ratio is way off from their competitors, that's a sign that something might be wrong.
Exactly, exactly.
Okay.
And another thing they could do is go back and listen to what management has been saying on those earnings calls.
Right.
Sometimes they'll give more context.
Yeah.
That helps explain the inventory changes.
Yeah, sometimes those statements give you insight into what they're planning
Exactly.
and what they think is going to happen in the future.
Exactly. For example, they might say, hey, we decided to stock up on raw materials because we think prices are going to go up.
Right.
Or they might say, hey, there could be some problems with the supply chain coming up.
Right. Or they might just be trying to downplay a problem
Could be.
that they haven't figured out how to fix yet.
Exactly. Exactly.
So you really do have to look at everything
You do.
and see if the story makes sense.
You got to be a detective.
It's like being a detective.
It is.
Okay, so we've been talking a lot about Rajoo,
Right.
but let's zoom out for a second and talk about how they fit into the world.
The bigger picture.
Yeah, the bigger picture. So they make these machines that are used to create plastic products.
Lots of them.
Yeah, all sorts of stuff, right?
Yeah, pipes, packaging, even medical devices.
So how well they do is connected to how much demand there is for those products.
Exactly. If construction slows down, demand for plastic pipes might drop.
Right.
And that would affect Rajoo's sales.
It's all connected.
It is.
So it's really important to understand what's happening in the economy overall
Right.
when you're trying to decide whether or not to invest in a company.
For sure. You have to think about things like global demand for plastic, oil prices, even government regulations.
Now, there's been a lot of talk lately about sustainability and the environment
Yeah.
and the impact of plastics.
For sure.
So is Rajoo addressing those concerns?
Well, it's not a big focus in these documents,
Okay.
but on their website, they talk about making their machines more energy efficient
Right.
and supporting recycling.
Okay, so at least they're thinking about it.
It seems like they are.
Yeah.
But for investors who care about those things,
Yeah.
this is something they should definitely look into more deeply.
Right, because a company that isn't environmentally friendly,
Right.
well, that could really hurt their profits in the long run.
Exactly. Consumers are looking for sustainable products,
Right.
and the rules are getting tougher.
So if Rajoo wants to be successful, they need to change with the times.
Absolutely.
Yeah.
They need to embrace sustainability if they want to stay ahead.
Okay, so let's get back to the numbers for a minute. One thing that jumped out at me is that their cost of materials was way lower this quarter
Yeah, way lower.
compared to both the previous quarter and the same quarter last year.
It was 1,143.76 lakhs compared to 2,408.60 lakhs and 4,334.39 lakhs, respectively.
Okay, so that's a pretty big drop.
It is.
Do you think that's related to that inventory swing that we were talking about?
Yeah, it could be a sign that they're getting better at buying raw materials,
Okay.
or that they found some cheaper suppliers. But we have to look at the whole picture, right?
Right.
Did that lower cost actually help their profitability?
That's a good question. Let's see. So their gross profit actually went down a little bit
Oh, interesting.
from the last quarter,
Okay.
even though their material costs were way lower.
So something else is going on there.
Yeah, something else must be happening. Maybe their selling prices have gone down,
Mhm.
or maybe they've got some other expenses that have gone up.
Like those employee benefits you pointed out before.
Right, those were increasing.
Yeah.
So for the quarter, employee benefits expenses were 571.26 lakhs
Uh-huh.
compared to 571.26 lakhs in the previous quarter. So not a huge jump,
Right.
but still, it's worth noting.
Yeah, especially if it keeps going up.
Yeah, because if labor costs keep going up, that can eat into their profits.
Exactly.
Even if they're doing a good job of managing those material costs.
It's a tough balancing act.
It is.
Right. You want good employees, but you also have to keep costs under control.
So we've talked about their costs, but what about the revenue side?
Yeah.
Are there any clues about how they're planning to increase sales?
Well, remember those new orders they got in South America and Southeast Asia?
Right.
That's a good sign.
Yeah.
Getting into those new markets can really boost their revenue,
Yeah.
especially for a global company like Rajoo.
But we also talked about how hard it is to break into those new markets.
Right.
So how are they paying for all of this?
Good question. They don't really say anything specific about how they're financing their international growth.
Okay.
But they did just issue those bonus shares, remember?
Right.
That could free up some extra cash.
Yeah. And attract new investors.
Exactly, yeah.
Who are excited about their plans.
It's like they're telling the market, hey, we're confident about the future. Come join us.
Now, the plastics industry is always changing.
Yeah, new stuff all the time.
Yeah. So are they investing in research and development to keep up?
That's important, right?
Yeah.
Got to stay ahead of the game. The documents don't give specific numbers for R&D spending,
Okay.
but their website does say they're committed to developing cutting-edge technology.
So they're at least saying the right things.
Yeah, but to really know how innovative they are, we need to see more details
Right.
about what they're investing in.
And what new products they're working on.
Exactly.
Okay. Before we move on, we really do need to talk about that core agenda.
That reporting error.
Yeah, where they left out those profits from the joint venture. What could this mean?
Well, it's definitely concerning.
Yeah.
Now, it's good that they issued a correction, but the fact that this happened at all raises questions about their processes,
Right.
about how they make sure their numbers are accurate.
It makes you wonder if you can really trust them.
Yeah, and investors need accurate information
Right.
to make good decisions. This could make them hesitant in the future.
Yeah, this whole situation really highlights how important it is to have good corporate governance.
Absolutely, yeah. Transparency and accountability.
Right.
Those are essential.
Yeah, you have to be able to trust the company.
Right. That's how you build trust with investors.
Right. Okay, so to recap this part of our deep dive,
Right.
Rajoo is trying to grow, they're expanding internationally,
Mm-hmm.
but they're also facing some headwinds,
Yeah.
like declining standalone revenue and competition.
Uh-huh.
And then we have all these questions about their internal controls.
Yeah.
Plus, they're in an industry that is facing a lot of scrutiny about its environmental impact.
Right. That's a big one.
So investors really need to weigh all of this before they decide if Rajoo is the right investment for them.
For sure.
Okay, I think it's time to take a look at their debt
Yeah, good idea.
and their liquidity.
Let's see what the balance sheet tells us.
Yeah, how much debt do they have?
Right.
Can they pay their bills?
And what about those dividends?
Right, are those dividends sustainable?
Yeah. Or are they just trying to make investors happy in the short term?
These are all really important questions.
They are.
So, listeners, stick with us as we keep diving deep.
Into the world of Rajoo Engineers.
All right, so let's talk about this debt.
How much are they carrying? Is it manageable?
Right, that's what every investor wants to know.
Because
So if we look at the balance sheet, it looks like Rajoo has a mix of short-term and long-term debt.
okay.
What does that look like?
So as of December 31st, 2024, they had about 3,085 lakhs in short-term borrowings.
Okay, and long-term.
Long-term is much lower, about 1,061 lakhs.
So it seems like they're relying more on that short-term financing,
They are.
which can be a little riskier, right?
It can be.
Because usually short-term debt has higher interest rates,
Right.
and it has to be paid back more quickly.
Exactly. And that can make a company more vulnerable
Right.
if the economy takes a downturn.
Or if interest rates suddenly change.
Exactly.
Yes,
But
there's always a
there is.
short-term debt can also be more flexible
It can.
because you can adjust how much you're borrowing.
Right. Depending on what you need at the time.
So it's kind of a trade-off.
Is.
But how do we know if Rajoo is taking on too much debt?
Right. Are there any ways to measure that risk?
Yeah.
Absolutely.
Tell me more.
So one common ratio is the debt-to-equity ratio.
Uh,
And this compares the company's total debt to its shareholder equity.
okay.
And it gives us a sense of how much leverage they're using.
Okay, so what is Rajoo's debt-to-equity ratio?
It's about 0.37.
Okay, so what does that tell us? Is that good? Is that bad?
Well, it really depends on the industry
Okay.
and the company's specific situation.
Right.
But in general, a lower debt-to-equity ratio means the company is being more conservative.
Okay.
And a higher ratio means they're relying more on debt.
So where does 0.37 fall on that spectrum?
It's on the lower end, so it suggests that they're not overly reliant on debt.
Okay, that's good.
Yeah, but it's important to compare that to other companies in the same industry.
Right.
And also to watch it over time.
Yeah, see if it changes.
Exactly.
Okay, so they're not drowning in debt.
Not yet.
But we should keep an eye on it.
Definitely.
Now, what about their liquidity? Can they pay their bills?
Right, so to figure that out, we can look at their current ratio.
Okay.
And this compares their current assets to their current liabilities.
Got it.
And it gives us an idea of whether they can pay their short-term debts as they come due.
Okay, so what is Rajoo's current ratio?
As of December 31st, 2024, it's 1.72.
Okay, is that good?
Well, ideally, you want to see a current ratio of 2 or higher.
Okay.
That means they have plenty of assets to cover their liabilities.
So 1.72 is a little bit lower than that. Should we be worried?
It's not great, but it's not necessarily a huge red flag by itself.
Okay.
Again, we have to look at the context,
Right.
compare it to other companies,
Yeah.
and watch it over time. If it keeps going down, that could be a problem.
Okay, so something else to monitor.
Yes.
Okay, before we finish up, let's talk about those dividends.
Those payouts to shareholders.
Right. Rajoo announced a final dividend of 0.125 rupees per share for the financial year. Given everything we've learned, is that something they can actually afford?
Right. Can they keep paying that out?
Exactly.
So to figure that out, we can look at their dividend payout ratio.
Okay.
And this tells us what percentage of their earnings they're giving out as dividends.
Okay. And what is their dividend payout ratio?
Based on their last annual report, it was around 10%.
Okay. And is that good?
Typically, you want to see a payout ratio below 50%.
Okay.
That means they're keeping enough money to reinvest in the business.
Right. They got to keep growing.
Exactly.
So they can keep paying those dividends.
Exactly.
So 10% sounds pretty good for investors who are looking for income.
It does.
But we want to see them keep growing those earnings.
Absolutely.
So they can keep those dividends coming.
Exactly. You want that sweet spot between rewarding shareholders and investing in the future.
It's a balancing act.
It really is.
And that's what running a business is all about, right? Managing debt, making sure you have enough cash, staying ahead of the competition, and adapting to whatever the market throws at you.
It's complicated.
It's complicated.
Yeah, there's a lot to think about.
Well, I think we did a pretty good job today.
I think so, too.
We went through their financials, we talked about their plans for growth, we looked at their debt and liquidity, and we even talked about those dividends.
We covered a lot.
I did.
And I think we showed how important it is to look at the context.
Right.
You know, compare them to other companies. Watch the trends over time.
Absolutely. Got to see the big picture.
Exactly.
And we can't forget that Rajoo is part of this much larger story, the story of plastics.
Yeah.
Their products are used to make all kinds of things that we use every day.
It's true.
Which brings us to a really important question for our listeners.
Okay.
As we're all trying to figure out how to make our world more sustainable, what role can companies like Rajoo play?
That's a good question.
Can they innovate? Can they find ways to reduce waste? Can they make recycling easier? Can they lessen their impact on the environment?
These are questions all companies need to be thinking about.
Absolutely.
It's not just about the numbers anymore.
Right. It's about doing what's right for the planet.
Exactly.
So, listener, keep thinking, keep asking those questions.
And keep diving deep.